Quebec-based convenience store giant Couche-Tard is walking away from its massive takeover bid to buy the 7-Eleven chain. The offer was valued at about $47 billion US. Couche-Tard, which has stores in Quebec but under different banners across Canada and the US, saying the breakdown was because of a, quote, persistent lack of good faith engagement. The move basically shutting down a long attempt by Couche-Tard to try and create a global convenience store giant of 20,000 locations, which would merge its Couche-Tard brand with Circle K and 7-Eleven. Let's bring in retail analyst Doug Stevens. Doug, your reaction to Couche-Tard walking away, what do you think?
Well, you know what, Todd? I think it's bad news, certainly for Couche-Tard, but I would argue that it's actually good news for consumers and good news for the market. And I say that because there's significant amounts of research today that point to the fact that when you have these kinds of massive mega mergers or acquisitions, and you take two entities creating one larger entity, it actually reduces competition, it tends to raise prices, it dulls innovation, and it's just not good for the health of sectors or markets. So on that level, I look at it as a good thing. But it's also true when we look at it on a more micro level from the standpoint of both of these companies. Ever since this acquisition or potential acquisition was announced, we've seen a drag on both of their stock values. Couche-Tard has been losing ground the longer this drags on. And so by their account, Seven & I was frustrating negotiations, and so they've packed up their tent and gone home.
Many people, Doug, as you know, might think that 7-Eleven is an American company, but in fact it is owned by a Japanese company. And the company has certainly not seemed all that interested in Couche-Tard since this whole saga began. What value do you think Couche-Tard saw in trying to take over 7-Eleven?
Well, first of all, you're absolutely right. Yeah, 7-Eleven is not a company that we would normally think of as being a Japanese company, but it was indeed acquired by a Japanese entity in 2005. I think what Couche-Tard obviously saw was an opportunity to break out in a category that is relatively fragmented. There really isn't one particular entity, with the possible exception of 7-Eleven, that really has a significant market share in the category. It would have given them enormous economies of scale, obviously allowed them to expand into markets where that might not have been possible otherwise. So yeah, I mean, there was a clear upside here for Couche-Tard. But there has also been over the years a noted hesitancy on the part of many Japanese businesses to engage in takeovers. It's just sort of not a cultural norm, and it's something that their government has been trying to actually soften and break down.
We know Couche-Tard, Doug, is a huge Quebec and Canadian success story, largely anyway. Does that have any, does that change as a result of these latest developments? What do you think?
Well, I'm not sure that it really changes significantly from that standpoint. I do think that certainly their investors are going to be looking for a what's next. And there was, I think, some trepidation amongst investors about this deal. I mean, these are obviously very uncertain times from a geopolitical standpoint, from an economic standpoint. We're seeing softening in consumer markets. So I think they've taken a deep breath, but obviously the question now is, how does Couche-Tard get back to some semblance of organic growth in a category that frankly is being attacked by, everyone on all sides? Discounters, online has changed the equation for convenience. Dollar stores, certainly, and the growth of that sector has impacted them. So it's a very uncertain category at a very uncertain time, and investors are looking for growth.
Doug Stevens joining us, retail analyst. He's in Ancaster, Ontario today. Good to see you, Doug. Thanks for this.
Thanks, Todd.